Crypto Hotep here with another investing video. We are on week 86 of the Family Portfolio Dividends Tracker. Thank you guys. Thank you for tuning in again. Really appreciate the support and the views. The last video we got, it has currently, I believe, over 150 views on this video, which is a lot typically. So I'm glad these videos are catching some steam here, getting some momentum. And appreciate the views and the comments and the likes, guys. Please keep doing it, and please keep subscribing. Before we go into this week, if this is your first time watching the video, feel free, go to the channel, go to week number 1 of the Family Portfolio Tracker, and that's where I'll go through my whole methodology, why I'm doing what we're doing. And basically, in a nutshell, what we're doing is we're tracking the investment journey with my family. We made some stock picks, and we are tracking those stock picks, tracking the news, how we're feeling, the balances, dividends, all that good stuff. And I'm recording them for my own edification, first and foremost, and for my own family's edification as well. But if you find them enjoyable, as I mentioned, like, subscribe, comment, and support that channel. But by no means is this financial advice, guys, at all. Please do your own due diligence when investing into stocks or crypto or anything of the like. Going into this week's news, the big thing with this week was the Japan bond yield surged to rates that they haven't seen in over 10 plus years. The reason why that's a big deal is because if you're not familiar with bonds, a bond itself provides a set interest rate that you can get by putting money or buying them. So, if I put $1,000 into a bond, typically a bond will yield anywhere between 2 and 4%. I can guarantee on getting 2 to 4% of my money, in addition to my money back once that bond matures. The thing with the Japan bond yield is it was significantly low. So you could probably see in this chart here, it was significantly low to the point of it was under 8%. Well, Crypto Hotep, why does that matter? Well, because people were borrowing the yen because it was so cheap. It was very cheap to borrow the money. It was less than 1%. So you would borrow this money, and then you would buy risk-on assets like stocks, and particularly you buy stocks overseas, i.e. the US stock market or crypto, for instance. But now that the bond yield has pushed up significantly, now investors might be peeling back of those stocks and that crypto and focusing more on holding that Japan yield, or the Japan bond, I should say, only because that's a guaranteed interest rate. So it's guaranteed money, no risk, and your money is quote unquote safe. So that was big. That's big on the markets, a lot of volatility because of this. The other items we have are the ongoing Fed interest rate cuts. A lot of job numbers came out this week, and they further promote that there will be a rate cut in December. We shall see. Okay. The end of quantitative tightening. Believe we mentioned this last week or the week before, is December is the official month that quantitative tightening ends. So it ends officially on Monday. And what quantitative tightening means is the Fed's budget sheet is now free to buy equities in such as stocks, maybe loading up on potential metals, maybe even starting a Bitcoin stockpile or a Bitcoin pile, if you will. So just the Fed can purchase equities and pump liquidity in the market, and that's what you want to see. This is funny. The most market conscious US president ever. This is very true. Whenever Trump can talk about the stock market, he will. And that's huge for the stock market. So very, very, very interesting times that we are in before we go to week 86. As always, guys, we go to week 85. Week 85 saw us with an all-time high balance of over $3,700 at $3,706.48. Money weighted rate of return 18.55%. Dividends earned of $29.85. Market gain of $418.43. This week, 86 saw us with another all-time high here, $3,732.64. 18.74 money weighted rate of return year to date, market gain of $422.70, and then dividends earned of $33.38. So what actually happened between this week and last week? Just a bunch of dividend activity. So we did get some dividend activity and payouts from Starbucks at $1.04, Target at $1.06, and then Visa at 20 cents. Now again, if this is your first time watching the video and you're scoffing at these dividend payments, I get it. 100% understand. But you have to keep in mind with dividend investing, it's not about necessarily the amount of money you get at the start. You have to just get in the habit of building the position more and more, and just making sure you're getting those dividend payments and that the dividend payments are more than the previous one. So as long as they're not cutting the dividend rate, as long as those dividend checks are still flowing in here, and as long as you're still stacking, it's all good. The other thing is with dividends is you need to have your quote unquote drip on, kind of as the kids say nowadays. But for investing, drip is the dividend reinvestment plan. So with M1 Finance, it's very easy. You're given or you're paid out your dividends here, and then the system will automatically buy that equity or that asset, as I mentioned, automatically. So we got paid $104 here from Starbucks, and then the system automatically buys $104 worth of Starbucks. Same thing with Target. The threshold, I believe, is $1, so that's why you don't see a purchase for 20 cents for Visa. It's all good. Okay. We also had a deposit of $20. Again, we've upped our amount that we deposit every 2 weeks. And we've now doing $20. It was 15. With that $20, we did buy a lot of Costco. We bought Waste Management, Microsoft, Sony, and Cintas. Okay, so let's see where all that landed here, guys. So as always, we go to everybody's portfolio. We go bottom to top based on balances. So bottom is our middle. Our middle is $487.78. Money weighted rate of return of 11.88%. Market gain of $30.50. Dividends earned of $4.12. So what's my take on the stocks here? So we just spoke about Target and receiving that dividend payment, and then also Starbucks. Those are the Achilles heels of our middles portfolio. They honestly just haven't had good years because of a lot of business related incidents. With Target, a lot of DEI things, even Starbucks too. It's just a lot of business practices that were a little wonky, and they just haven't recovered fully. But the good thing is that you can see the silver lining is that we have made ground on decreasing how much red we've seen in these positions. Target, we were down over like 25, almost 30% at some points. Starbucks, we were down over 10%. It was bad. So we've slowly but surely continued to buy through the dips and continued to add, and we're kind of slowing the bleeding here. Costco down over 7%. Again, anybody down over 5%, you may raise some eyebrows. Me, I'm Costco all day. I'm not really worried about that. Amazon up over 8%. Google up over 100%. That's not a typo. Tesla up over 35%. And then Sony, one of the best stocks in anybody's portfolio by far this year, up over 22%, double digits, and hasn't seen a red day yet. I have not seen a red day in our middle or our youngest for Sony. And speaking of our youngest is next up. Balance of $535.31, up over $19.36%. Money weighted rate of return year to date. Market gain of $58.95. Dividends earned $2.51. So Tesla up over 36% on Tesla. Apple doing what Apple does, up over 27%. Starbucks, as we mentioned, down over 4%. Costco also, as we mentioned, down over 3%. But Sony up over 28% for our youngest. Crazy. Sony is just doing it. Our next stocks are belong to my wife, and my wife has actually jumped spaces. You know what's crazy is my wife's year-to-date portfolio. It was a scary time earlier in the year. Earlier in the year, as you can see here, it was very very scary around this time, and my wife was the last one. Um, in terms of balance, year to date returns weren't there. It was just bad, and it was because of Celsius. Celsius was the Achilles heel for her portfolio, but now the balance is boosted, so up over 500 at $535.80 is the balance. 53.07% money weighted rate of return year to date. Dividends earned a $33, and 74 cents. Market gain of $124.99. Big thing is when you have gainers like Google at up over 100%, Tesla, I'm telling, and this is what I'm saying, like, if this is your first time watching a video, go to a sporadic week and watch just a random week, like earlier in the year, and you'll see like we were down on Tesla so much. Tesla, we were bleeding out. It was over 30%, 25%. It was like Starbucks. But we stayed true because we knew the vision with Elon, vision with Tesla, that hasn't changed. Nothing has changed there. And so we just kept buying the dips, and we are reaping the fruits from that, up over 50% year to date. And then Celsius, up over 55%, no big deal. Microsoft, we just added this position, so we're still building this position here. We are down over 2%. I'm never worried about Microsoft. Microsoft will do what it does. Overall, though, my wife's stocks are the healthiest of anyone, biggest gainers of anyone, and just the best performer of anyone. Our oldest stocks has a balance of $1,086.43. Money weighted rate of return 12.44%. Very good. Market gain of $94.13. Dividends earned of $6.91. And very simplistic. We've not changed anything for our oldest. 4 stocks and very good companies. Excuse me. So Apple, McDonald's up over 10.5%. That's saying something. That is saying something. Costco down over 5%. As I mentioned, I'm not worried about it. And then Tesla, we are riding the double-digit gains with Tesla. And then last but not least, my stocks, I am up over 1,000 at $1,087.32. Money weighted rate of return year to date is 16.98%. Market gain of $114.13. Dividends that I've earned $16.10, which is pretty good. With me, technology is a big deal. Microsoft and Google are the only 2 holdings I have for technology right now, and they're doing it. Finance is down. Finance is Visa and Moody's. Visa is down. We just got dividend payment from them, and Moody's has just crossed over green. Industrials and energy currently, with Cintas and Waste Management. We did buy some more of Cintas and Waste Management. Why? Because they were on sale, and I don't mind buying them. And those orders that we saw earlier in the video, those orders for Waste Management and Cintas were for me in this portfolio. Real estate is O Realty Group, and I'm just using that for compounding. And then pharmaceutical, AbbVie is like really doing it. So AbbVie, my position on AbbVie is causing this to be up over 32% year to date for pharmaceuticals. Love to see it. And our consumer and staples, they're down over 1%. That's Lowe's and Costco, but as we spoke about, not really worried about those at all. Restaurants and food, they're the GOATs, Coca-Cola and Domino's Pizza. And Coca-Cola, we're up over double digits on Coca-Cola. Domino's Pizza, Domino's Pizza will find its footing again. Not really worried about that position either. So just close it out here, guys. Week 86 of the family portfolio saw us with another all-time high balance, $3,732.64. Money weighted rate of return year to date 18.74%. market gain of $422.70, and dividends earned of $33.38. If this video was helpful, guys, like, subscribe, turn on the notifications. Yeah, do that. If you're already subscribing, make sure you turn on those notifications so you know when these videos drop. And please share the videos with other like-minded individuals like yourself. I did receive a couple messages and comments saying that people are liking the video because it helps them stay consistent with their investing as well, just to see the consistency every week and just keeping the plan going forward. So I'm glad they're helpful, really glad they're helpful. And as always, guys, thank you and happy investing.